Our financial performance for 2017 was very encouraging. It demonstrated our control over the costs in the business, but also the ever-growing and expanding relationships that we have with our customers. And it's given us the opportunity to continue to focus on our goal of profitability. In driving the performance of the business, and now that we're far more stable than we were, we have 4 primary KPIs which we use to track our performance. They are the number of invoices that we process, the average revenue that we achieve from our network business for each invoice that we process, our operating cost base, and the outstanding receivables from our Tungsten Network Finance business. So taking each of those in turn, our invoices grew by 1 million over the year to 17.1 million. That's a 6% growth, which is a little lower than the 9% we achieved in the prior year. However, we see invoice growth really as a lagging indicator, and so a lot of the good work that we've done over the course of the last 12 months, we expect to come through this year and help us accelerate the increase in invoice volumes over the network. Our revenue per invoice grew by 13% to £1.82 per invoice. And what that really reflects is the growing recognition of the value that our current and our new products create for both our buyer and our supplier customers. Moving to the next 2 KPIs, firstly with our operating cost base. We reduced it on a constant currency basis by nearly £2 million in the year, reflecting a re-engineering and a refocus of where we spend our money really right the way across the business. And that doesn't take into account an additional £2.8 million reduction from the sale of Tungsten Bank. Our supply chain finance operation is measured by the average outstandings, which stood at £14 million over the course of the year. We see momentum within that business and expect that number to grow as FY18 continues. We don't set our targets lightly, and a lot of consideration has gone into what our target should be, but more importantly, the operating processes and focuses in order to achieve those targets. Across our business, we have done an awful lot to both enhance our customer relationships and therefore our revenues, but also to adjust our cost base, increasing automation, increasing efficiency, and reallocating costs away from back office processes and towards marketing, product development and sales costs. It's both areas, revenue growth and the reduction in our cost base, which we're carefully managing and which will see us towards achieving our goal of monthly profitability in calendar 2017. We've embarked on a multi-year program to change the cost base of Tungsten. That's touched every area of the business, some of which we've now completed. Our finance and HR shared service centre is live in Kuala Lumpur and delivering over £1 million worth of annualised operating savings. We've identified further opportunities to continue to refine our cost base. In particular this year, we have 2 programmes of work, one to continue to reduce headcount, but more significantly to swap out some of the vendors who are on a considerably higher rate than what we can achieve in the market today. The total cost of doing these 2 programmes will be about £2 million, but they'll reduce our operating cost base by about £1.5 million and pay back over 18 months. We're operating to an organic management plan that will see us cash generative and self-sustaining from fiscal year 2019 onwards. The sale of Tungsten Bank really recapitalised our balance sheet this year and gave us sufficient cash resources to achieve those plans. The board and the management team of Tungsten are focused on a management plan that's organic and we believe, once delivered, will see us achieve all of our objectives. That said, we are seeing some consolidation in the industry and we are continuing to identify where there are products or other opportunities which could complement Tungsten and really help us serve our customers better. The board is clear that the hurdle rates that it sets for any opportunity is that it must accelerate Tungsten's growth and be accretive to shareholder value.